Hello, ORAT Nation. Today is Wednesday, June 13th. Wait a minute, Juneteenth. It's Juneteenth. So markets closed today. I promised I would do two videos today. The previous one that I just did was on Max Payne, which is coming up this Friday. I encourage you to take a look at that. I asked Mr. Zuber to post that one today because it's related to Friday's options expiration. So I really wanted to get that one out. This one may not post, I don't know if it'll be today or tomorrow, but anyway, this is an article that he sent me while he's on vacation about, I'm going to go through that article with everyone, about the Dow hitting 100,000. 100,000. Is that even possible? Well, let's take a look. Let me share my screen and we'll dive into that question. For those that are interested, my website is breakpointtrading.net. Click on this box if you want the free newsletter. I put that out every weekend. One thing that I've added for subscribers is an index trend model where it actually shows the trend, short-term, medium-term, and long-term trend of the S&P, NASDAQ, all of these things, including Bitcoin, Magnificent Seven. So when these change, you'll see the date that it changed. Bitcoin got a short-term down on June 12th, but it still has a medium-term and a long-term up signal. And the colors over here are the different years. So blue is the current year, red is the previous year, and green is actually 2 years ago. So that's right on the top page. I've also got one for sectors, and I'm thinking about doing this also for the Magnificent Seven plus, a few, probably 11 stocks. So just so you can track when their trends are changing, and if it changed this week, I'm highlighting it so you can see Staples actually got an up signal, short-term up signal on June 17th. So if it happened this week, it'll be highlighted like that. So that's just something new that I just added. I'm always adding things to the website. So let's talk about Dow 100,000. Is that even possible? First, let me show you the article that Mr. Zuber sent me a couple of days ago. Actually, yesterday, I think he sent this. Dow Jones will eclipse 100,000. So my first question, and this is dated June 17th. My first question is, well, that's great, but by when? Does he even say that? He actually does. So interest rates and growth, Dow will be above 100,000. Stock prices love strong earnings. Yeah, obviously, AI boom. I'm going to try to point out a few things in this article. Okay, 7 to 9 year timeline. So sometime, let's give them the benefit of the doubt and call it 9 years. So sometime in the next 9 years, it will eclipse 100,000. Main message is powerful bull market, needs 160% potential. I think he puts in an annual compounded rate. Talks about the Fed rate cuts coming, strong earnings, etc. Trillions of dollars of cash on the sidelines. Yes, a lot of people are putting their money into CDs and money markets paying 5%. So as the rates start to drop, then you're probably going to start seeing that money come out of CDs and out of money markets and into the stock market. Not a bad time to be in stocks right now. Yes, watch my video on Max Payne, so you might have an opportunity to get into some of those favorite names you might like. So prediction of Dow, 100,000 within 7 to 9 years sounds pie in the sky. Well, we're going to talk about that, whether it's pie in the sky. Wouldn't be out of historical norms if it did occur. It would need to grow at a compounded annual growth rate of 11% over the next 9 years. Now, historically, it's grown an average annual rate of 10%. It's probably a little bit less than that. It's probably like 9.8, just below 10%. But let's round it to 10%. So 11% is not out of the realm of possibility, compounded. Now, that means it has to do 10% every year. So remember that. Keep that in mind. That's really important when I present my thesis here. So that's it. So Not out of the question, could happen. Will it happen? So the first thing I want to introduce you to is a book written by Jeffrey Hirsch from Stock Traders Almanac. And those that have been watching me on this channel know that I love Stock Traders Almanac. Gives you historical perspective on the market. It was started by his father, Yale Hirsch, and he's carried it on. So in 76, he predicted a 15-year super boom. Now, in this particular book, what his son Jeffrey is saying, and notice the date, by the way, March 2011. The Dow at this date, and I went back and looked it up, was trading at about 12,000. It's a little bit over, but it's roughly right about 12,000 on March 2011. And he, again, you know, how long is he giving it to hit that 38,820? Is pretty specific here too, 38,820. We're going to look at the Dow here in a second. Here's some of the table of contents, which are the titles are interesting. So it's a very interesting book. Talks about super booms, talks about the history of ignorance and the ignorance of history, financial calamity, all the different things, World War I, World War II, just historically, all the things that have happened to cause the market to go higher. Now, I talked about the way the market is structured. I talked about that with Suber a couple of weeks ago. And what I said was the markets are designed to go higher. So the Dow that we have today is by no means the same Dow that we had 10 years ago or 20 years ago, or certainly not 30 years ago or 40 years ago. The Dow keeps reinventing itself. So they'll take names out of it that either get acquired by other companies or they start to underperform. They will take those names out and they will replace them with companies that are outperforming. So companies that are in the new industrial age or the new technology age. So Microsoft and Salesforce are now in the Dow, where they weren't there 30 years ago. Salesforce didn't even exist 30 years ago. So that's why the Dow will continue to outperform, will continue to go up. And that's just how it's designed. It's designed to go higher. It will always be designed that way, and it will always go higher. So Jeffrey Hirsch said in 2011 that the Dow was going to hit 38,820. He said it would happen by 2025. So we're not far away from that, 2025. Let's go, just out of curiosity, go back to the homepage of my website. And this is available for anybody. You don't need a subscription for this, but these 4 little charts right here. You can see the Dow Jones right here. Let's take a look at the Dow today, or as of the close on Tuesday, yesterday, and see where it is. Oh, it's at 38,830. Well, he missed it. He said 38,820. It's $14 higher than what he predicted. And he predicted it by 2025. And here we are right in the first half of 2024, and it's already there. In fact, it hit 40,000. So his prediction actually came true. Now, what does that mean? And he gives reasons for all of this. And keep this date in mind, the 2011 date. That's a very important date. So the Dow is at 12,000. That represents about a 325% gain since that date in 2011. So could the Dow go from 38,820 or 38,834, but just for the benefit of the doubt, let's say he was spot on and hit 38,820. Could it go from there to 100,000? Well, from 12,000 in 2011 to 38,800 represents 325% roughly. To go from 38,800 to 100,000 is only about 260%. So it's actually less than what he was predicting. This is actually represents a 325% gain, whereas the prediction to 100,000 is only a 260% gain. So from that perspective, absolutely it could get there. Now, let's look at one other thing, and something that I've talked about many times, and it's so important that it's right on the front page of my website. and that is secular bull and bear markets. So 2011 is right here. It was right at the tail end of a secular bear market. We had already hit the generational low in 2009, and we were rallying off that low in 2011. We didn't officially get out of the secular bear until 2013 when it exceeded the highs from back in 2000. So you could start the clock in the new secular bull from 2013, or you could do it from 2009. But he was saying in 2011, it was going to hit 38.8. And here we are right now. So he was pretty accurate, but he had the benefit of just about pretty much the whole secular bull right up till today's date, 2025. The secular bull will continue. They usually run 18 years, 18 to 20. So this is going to run until sometime between 2029 and 2033. Okay, so he had tailwinds of a secular bull behind him when he made that prediction. But what's going to happen with this 100,000 prediction? And this is something that he doesn't mention in his article, the guy that wrote the article about hitting 100,000. And to me, it is a grave oversight. So 2009 would put it from 2024 right now to 2033. And look what this last date for the end of the secular bull, 2033. So yes, if the secular bull does last all the way till then it absolutely could go up another 260% and hit 100,000 before this. But if something happens to the secular bull where it ends early, which it probably will, I think, then he will miss his 100,000 mark, but he probably will get pretty close and probably declare victory. But we're going to then have a long secular bear market sometime, just before that happens. So the market might go ahead and push to 100,000, and then from there the secular bear kicks in and it will back off, and we'll have 12 years of pain and suffering after that. So from all perspectives, it's a little bit of a stretch to say it's going to happen by 2033, but it's not out of the realm of possibility. In fact, it's very much in the realm of possibility. Could absolutely get there by that date. So I think putting all of this in perspective, he has a good shot of hitting that 260%. Jeffrey Hirsch hit 325% with his prediction, but he had the tailwinds of a secular bull. This guy could hit the 260% and hit 100,000. He's going to be coming in right at the tail end of a secular bull. And if anything happens before that 2033 date, then he probably will fall a little bit short in his 9-year time frame. It will absolutely hit 100,000. But if it misses and the secular bear starts, we're going to have another 12 years. So it could be 20 years before that 100,000 finally gets there. But it really actually could make it. It probably hit the 100,000, and then from there the secular bull takes over. So that is my conclusion. We are in a super boom right now. He makes a case for, earnings and the Fed lowering rates, and all that is definitely going to help the market go higher. We probably will hit the highs. I think he says in here a high for the year of 6,000 for the S&P right here. See S&P 6,000 by the end of the year. Well, we're already at 5,400, and most people didn't think we would exceed 5,300 for the whole year. So if we go back and look at where we started, in fact, for this, I'm going to look at the on the charts page. There is Santa Rally for 2024. You can see right here where we started the year, right down here at about 4,700. We are already at almost 5,500. So we could easily get to 5,500. That's 800 points. Could we do another 500 to get to 6,000. We've done 800 in 6 months. So yeah, we absolutely could get to 6,000 by the end of the year. In fact, we probably will, with the benefit of an election year, sitting president running, all of that historically pushes the market higher by the end of the year. We may have choppiness through the summertime, and that might actually start with Max Payne. If you want to see what that's all about, look at the last video that I posted. But yeah, we could absolutely hit 6,000 by the end of the year, and we could absolutely hit 100,000 in the next 9 years if the secular bull doesn't end before then. So that's my conclusion. It'll be a fun ride. Maybe you should take all that real estate money, take all that equity, take it out of your properties and put it into DIA. DIA is the Dow. It's an ETF for the Dow. Put it into, this is not the ETF, but you could put it into the ETF for the Dow and just ride it for the next 9 years. You get a 260% gain. I'm just kidding. Don't really do that. That wouldn't be wise, but we could have a very fun ride for the next few years. Anyway, secular bull market, that's what we're in. I've been saying that for a long time. If we do get a recession, the recession will be short and shallow because we are in a secular bull market. We will not have a repeat of the 70s. We probably will have a repeat of the 20s. That's more likely. So we'll see what happens. Anyway, that's it for today. Happy Juneteenth to everyone, and I'll talk to you hopefully on Sunday. Take care.